Hey guys, good afternoon and welcome to the CNBC-TV18 Mumbai News Center. I'm Pavitra Parekh. You guys are tuned into your stocks and we have a lot of queries that we're going to get to in just a minute. But first up, a quick look at the market, which has actually recovered from the lows a little bit. So we were at one point seeing cuts of 1.1% on the index. So we have recovered significantly. There you have it on your screen from the lows. It is still a 100-point cut and it is a down day. In terms of sectoral indices too, everything barring just the pharma pack is in the red right now. The pharma index also just about managing to trade in the green. So it is all in all a down day. The mid caps underperforming today with a cut of 0.7%. So that's looking quite weak. And you also have the Nifty Bank, which, after a lot of the updates came through, is currently under pressure around 0.6% in the red. That's what's going on in, as far as the markets go. But let's invite our guests on the show and get to all of the queries now. We have Ruchit Jain, lead of research at 5paisa.com, as well as Sharad Avasthi, head of PCG research at SMIFS, to answer all of your stock-related queries. Sharad, Ruchit, thanks a lot for joining us and taking out the time for all of these viewer queries today. I'm going to get straight to them. Mukesh Srivastava writes to us from New Delhi. He holds 50 shares of HDFC Life at 600 rupees a piece, and he also has 15 shares of HDFC, which he bought at 1500. He says he's a medium-term investor and he wants to know what he should do with both of these investments, that is HDFC Life as well as HDFC. Ruchit, let me come to you first on this. HDFC Life, of course, currently it's pretty much at his buy price. So what do you think about this stock? The past 2 days have been good, but HDFC, of course, he's made some good money on. So what would you advise on both of these?
Hi, very good afternoon, Pavitra. Well, I think if he's looking to hold from a medium-term perspective, then the call should be to hold both the stock. I'll cover one by one. In HDFC Life, of late, we have seen that last couple of trading sessions, we have seen a good buying interest with the price up move have been supported by good volumes. And a long consolidation breakout has been seen in the stock. And the target projections over medium term technically are coming around 660, 670, which is about 10% high levels from current levels. So I think in the next 2 to 3 months, you can expect those levels around 660 to 670, where you can again take a review on the stock. And as of now, the call would be to hold on. Even HDFC Limited, if we see, last 2 or 3 weeks the price wise it has been showing some sideways move, but this just seemed to be a time wise correction within a broader uptrend. The overall chart structure is quite positive if I look at the weekly or the monthly charts, and at the high levels the stock could head high towards 2800 2850 mark in the medium term. So both the stocks are good technically, so my advice would be to continue to ride this trend.
Okay, continue to ride this trend. Sharad, let me also come to you on these. What do you think of HDFC and HDFC Life? Would you agree with Ruchit that these are both good stocks to hold on to and have in your portfolio?
Yeah, certainly. I totally agree with Ruchit, and both are decent bets. The only difference could be that HDFC Life being into life insurance, and it is a slow grinding business that will grow. But we are very bullish on the prospects of life insurance in the country over the long term. In the short term, maybe not too much upside, but even considering FY24 numbers, I think the fair value for HDFC Life should be somewhere around 700, 750, considering it trades at 3.5 times EV. And it is the largest private sector player in the insurance space, and with the merged entity, I'm expecting a lot of aggressive growth in this business also. And so I think HDFC Life he can hold for a target of around 750. HDFC, again, I think with the merger there should be aggressive growth. The valuations right now are not very demanding, neither for HDFC Bank nor for HDFC. We believe that there is another potential 20% upside to the stock. It's better you switch it into HDFC Bank and hold on to it, because ultimately you would be holding HDFC Bank. But anyways, it's the same thing. So I think he can hold on to HDFC also with possible 20% upsides from current levels.
Okay, so both of our guests agree that HDFC, HDFC Life are both good stocks that you can have in your portfolio with a medium-term perspective. The next query comes in from Sahil Malhotra, writes to us from Patna. He says he has 30 shares of HCL Tech, which he bought at 1400 rupees, and he also has 20 shares of L&T, which he bought at 1800. Once again, he's a medium-term investor, and he wants advice on, both of these investments. Should he hold them? Should he get out and book some profits in these as well? Sharad, let me come to you on this. Of course, we know the kind of cuts that have come through in the tech index. He's also, bought HCL Tech at 1400. It has corrected significantly from there. But do you think with the medium-term perspective, he could make up this investment, or it's best to get out of this space completely?
For HCL Tech, I think 1150, the stock is more or less fairly valued. There are some avenues which could throw up some surprise in the future, but considering the type of growth we expect at 1100, 1150, we believe the stock is fully valued. It's better you switch from HCL Tech to something like an Infosys, where I think the upside is much better. So I think switching from HCL Tech to Infosys would be better for a target of around 1750.
Okay, that is on HCL Tech. What about L&T? He has made good money there, and you know the stock is up around 30% in the past 6 months or so. What is the kind of upside that you see here?
For L&T, we also hold it in our PMS, and we believe that the long-term prospects out of the core business should be very good for L&T going ahead. While the subsidiaries, which make up some part of the valuation, at least 30-35% of the valuation on an SOTP basis, we think that IT is a case where we could see some revival and re-rating. The same would be the case for L&T Finance also. So L&T Finance, LTI Mindtree, and LTTS, these three subsidiaries should result in some improvement in the SOTP value. Coupled with that, I think the core business is also trading at a steep discount to other players. So gradually there is a possibility that as we see a pickup in execution, there is a possibility that their re-rating could also happen. Fair value in terms of current numbers would be somewhere around 2200, 2250. So if you get around that price, I think he could book some profits, maybe 25-30%, but rest he can hold. I think it should be a very good play on the total capex improvement that we are expecting in the country.
Oh, absolutely. And we also have the budget, right, which is right around the corner, just about in a month's time. So that could sort of work well for L&T as well. Ruchit, coming to you on both of these stocks, HCL Tech and L&T, I know completely different, but take us through how these are both looking on the charts.
So I think HCL Tech, we have seen a good up move in the last 2 or 3 months, but of late when we compare it to the last 1 month's data, then I think the price correction recently have been supported by higher volumes. And usually whenever see price corrections with rising volumes, those stocks tend to underperform within the sector. So although overall it's not much negative, but I think relatively it would underperform other large cap names such as maybe TCS, Infosys. So it's better to take a switch from HCL Tech and within the same sector either switch to TCS or Infosys, which could be which could deliver better returns than HCL Tech in case the overall IT pack moves higher. L&T, my take would be to continue to hold on to the stock. We have seen that price up moves are being supported by good volumes, whereas corrections are on lower volumes. The stock is managing to hold above its 89 EMA on every corrections, and now 1950 to 2000 is the immediate support range for the stock. So I think near-term consolidations could be there, but these are based on lower volumes, so I think the downside would be limited. 1950, 2000, in fact, could be good levels to add more stocks if one is looking from a medium-term perspective for potential targets around 2300.
Okay, that is the call on L&T as well as HCL Tech. The next query coming in is from Jay Kumar Sanjeevan, who writes to us from Krishnagiri in Tamil Nadu. He says he has 20,000 shares of Tata Tele Maharashtra, which he purchased at 102 per share. He's a long-term investor and he wants to know whether he should hold the stock or sell it. Just to let you know, Tata Tele is currently at around 90 rupees a share. So it's, of course, he bought it at 102. So he has seen significant losses come through on this one. In the past 1 year, the stock has seen around a 60% fall. Ruchit, do you think, because, our viewer has a long-term perspective, do you think it makes sense to hold on to this one?
So even if I look at the historical charts, the stock is well known for its volatility, and whenever there are trended moves, these trended moves are quite big enough. So I think the risk is quite high in the stock. And whenever we see an up move, the follow-up moves are missing. So my advice would be better to lower the risk, get out from the stock on pullback move towards the cost. And 100, 102 is the resistance, which is the 89 EMA on the daily chart. So in case if the stock gives any pullback towards that 100 and 102, better to take an exit from this stock.
Okay, better to exit this stock. That is the view coming in on Tata Tele Maharashtra. Our next query is from Nagesh Gowda, who writes to us from Pune. He holds 10 shares of Tata Elxsi, which he bought at 8,000. He's a long-term investor and he wants to know whether he should hold this or exit at current levels. Sharad, back to the tech space now. And what do you think of Tata Elxsi? Because he bought it at a pretty high level.
Yeah, he bought it at a pretty high level, but at current prices, I think that most of the negatives are roughly priced in. Negatives in terms of the overvaluation that the stock had around, say, 6 months, 1 year back, trading at 80-90 times forward. Right now, the valuations are 40-45 times forward, and the EV segment and the AI segment, these could be some segments from where new avenues of growth, which could be very robust in nature, could emanate for the company. So I think considering the type of growth that can emanate from the EV space work that they are doing over the next 3 to 5 years, since he is a long-term investor, I think this is a story you can bet on. Right now, valuations are at 40-45 times, not considering any kind of influx of additional income from these sources. But I think over a period of time, they should gradually play out. The EV segment theme is very strong, so that should help Tata Elxsi. So if you are in the category where you can take some risk and hold it for a longer period of time, 3 to 5 years, I think it does make sense to hold on to it.
Okay, can hold on to Tata Elxsi. Is there anything else, by the way, that you like in the mid-cap IT space, or do you think where valuations have corrected enough for it to be comfortable as an investment?
Mastek as an idea, I think, is a very decent bet at these valuations. Similarly, OFSS, Oracle Finance, is a good bet at these valuations. Even the dividends are robust enough. In the large cap space, even Tech Mahindra is a very decent bet. Most places, I think there is an upside possibility of 30-35% for these stocks once the dust settles on the uncertainty around IT.
All right, got it. That is the call coming in on Tata Elxsi. Ruchit, what do you think of this one? How does it look on the charts? Once again, he's saying that he's a long-term investor, so if you could keep that in mind as well.
So we have seen a correction from that over 10,000 levels to sub 6,000 levels now. So definitely the momentum readings are in oversold zone, but technically the picture is not for bullish if I look at the medium to long term charts. So I think on pullback moves, the stock would again face resistance towards that 7,500, 7,300. In medium to long term. So I think if you're looking from a long term perspective, my advice would be to take an exit on any kind of pullback moves towards that 7,500 to 7,000 range, and better to switch some other names within the mid-cap IT space. I think Persistent and KPIT Tech, these are the two stocks where technical structure is quite strong, where declines are witnessing good buying interest at lower levels. So I think these stocks could show some good relative outperformance compared to Tata Elxsi.
All right, that is the complete view, technical and fundamental perspective on Tata Elxsi. With that, let's move on to our next query. Jay Krishnan writes to us from Kerala. He holds 719 shares of Sobha, which he bought for a medium term at 500 rupees a piece. Like I said, he's a medium term investor, and he wants to know whether he should hold or sell this one. Sobha currently at 581, so he has made money on this, but of course in the past 1 year the stock has not done too much. How do you look at this, Ruchit? Do you think that this is a good bet with a medium term perspective from here?
I think if you look at last 1 year, the stock has not done relatively well compared to some of the other real estate names. So I think he's still in profit, so it's better to book some profits at current levels rather than staying with the stock. Within the realty space, if I look at the other names, then after this correction, DLF, I think on the lower levels around 340, 350 would be quite an attractive bet, where the downside would be limited and the risk reward ratio would turn much favorable. So my take would be to take an exit from or book profits from Sobha over here, and on declines towards 350, 340 range, look to buy DLF with the same amount.
Okay, maybe you can switch from Sobha to DLF. That is what Ruchit has to say on this one. Sharad, what do you think about Sobha? Do you think this is, he's made money on this, so do you think it's still a good one to hold on to, or is there something else that you prefer within the real estate basket?
No, I think looking at the current valuations, it seems I have a total contrarian view. The stock looks very decently priced, and the type of growth we are going to see over the next 1 or 2 years is going to be very robust. They are primarily a Bangalore-based real estate company, and probably the only real estate company that has some backward integration into glazing and all that stuff they do. So I think, and the return ratios, etc., have always been good for the South-based real estate players. Sobha is no exception. Next few years, they are expected to deliver around 6.5 million square feet. The highest they have done till now is roughly 4 million square feet. So next 2-3 years, I'm expecting earnings to be very robust. Considering FY24 earnings to be around, say, 45 rupees also, I think ideally the stock should trade somewhere around 15-20 times easily. So I think he should hold on to it for a target of somewhere around 800-850.
Okay, that is the view on SOBA. The next query is from Sohail Khan, who writes to us from New Delhi. He says he has 70 shares of Power Grid, which he bought at 100. He's a long-term investor and he wants to know whether he should hold or sell. Power Grid currently is at 212, so it's more than double of the price where he actually made that investment. Sharad, your call on Power Grid. He's made good money, but do you think there's lots more upside here, or do you think most of the gains are in for now?
No, I think there is a lot of more upside. This is one of the structural stories we are betting for the next 5-10 years. The type of requirement that is emanating from renewable energy for grid transformation and grid upgradation, that should work out very well for Power Grid. And most of the global in India particularly, the expenditure around transmission is expected to be roughly 50% higher than what it over the next decade vis-a-vis what it has been over the last decade. So that should culminate very well for Power Grid. Considering valuation wise, I think even if you don't consider too much benefit coming out of this, even then 20-25 rupees kind of earning should happen, and a 15 kind of multiple or a price to book of somewhere around 1.92 should very easily culminate for the company. So I think 300 possibly is a very good target for the stock over the next 1.5-2 years, and even beyond that he can continue to hold. The dividend yields are also pretty robust for the company.
Okay, yes, sounding extremely positive on Power Grid. In fact, this entire space has been doing quite well. So I take that point. Ruchit, on the charts, does this look as attractive to you?
There may be some short-term consolidations in the stock, but the mid to long-term charts are quite attractive. We have seen a decent run-up since October 2022, May 2022, and post that the stock is trading within a range which just seems to be a time-wise correction within an uptrend. And once this time-wise correction is over, I think the next leg of up move could take the stock towards 270, 280 range in next few months. So definitely he should continue to hold on to the stock.
Okay, hold on to Power Grid. Both of our guests agree that this is a good one to have. The next query is interesting. This is from Meg Jain, who writes to us from Gurgaon with an investment query. She says that considering the PSU banks have done so well over the last year, she wants to know if she can buy stocks like State Bank of India or Punjab National Bank. Of course, this entire space has been in focus last year. This entire space saw a super rally, but the question is how much more is left here. So Sharad, coming to you on this one. On PSU banks, if you could take us through which ones look attractive, if you could maybe give us your top 3 picks over here.
So 2 of the stocks that she is asking is SBI and PNB. SBI certainly is a very good bet still. I think still the valuations are not very expensive, and you can expect that gradually the gap between private sector and PSU banks should narrow given the improvement in numbers that public sector banks are throwing up. So SBI, she can buy for a target of around 750 over the next 1.5-2 years. I think that those are conservative targets for the bank over the next 1.5-2 years. It is the largest PSU bank, needs no introduction. PNB, I would not be so bullish. I think the problem is that the net NPAs are still at around 4%. Though the corporate loan book is a major part of the book, so growing that book should grow at a much healthier rate. That should help PNB, and higher growth in advances should mask the NPA levels also, showing them at a lower level. But consider this fact that at a time roughly 20% of the corporate loan book was NPAs, and that is a problematic way. I think until and unless the bank starts showing up that the DNA within the bank is changing in terms of credit disbursals, I would not be very bullish on PNB at these valuations, though valuations are not compelling, 0.6, 0.7 times unadjusted book value. So I think it's okay, but I would not bet on this. Rather, I would bet on Bank of Baroda, where the NPA levels are under control. And another bank, if I have to bet on, I would bet on probably Indian Bank. That is one bank I like for the long term.
All right, Indian Bank, Bank of Baroda and SBI, these could be some good picks to look at within the PSU space, within the PSU bank space. Ruchit, your call on PSU banks. Do you think there's lots more steam left in this rally? And if yes, then what would you pick among these stocks?
I think as the way we have seen the buying interest in many of the PSU names, not only the banking stocks, in last 2 or 3 months, this certainly indicates that the mid to long term trend is still positive. And on any kind of declines, you would again witness some good buying interest in many of the PSU names. So I think within the PSU banking basket, if you look at the price volume action, then the leadership, of course, comes from SBI whenever the PSU banks move up. So in terms of relatively lower risk, I think SBI would be the top pick. and followed by other names such as Bank of Baroda and Canara Bank, where technical structure is quite constructive. So I think SBI, Bank of Baroda, and PNB, and Canara Bank, these three would be the preferred picks within the PSU banking names.
All right, got it. That is a complete call on the PSU banking space. But with that, let's try to squeeze in one more query. We have Raghu Ram, who writes to us from Chennai. He holds 30 shares of Lux Industries at 3,800 rupees. He's a medium-term investor, and he wants to know whether he should hold or sell at current levels. The stock has seen a sharp downtick ever since, the prices that he bought at 3,800 was around a year ago. So in that time, the stock is down, I think, around 55-60%. That's the kind of, move that you have seen on Lux Industries. Ruchit, on the charts, does it look like a recovery is in sight?
Frankly, the trend still continues to remain negative. We can see that in spite of that stock showing after a big correction, in the last 2 or 3 months, when most of the mid-cap and the small-cap names have done well, the stock has not managed to show any kind of pullback move as well. It is oversold on the weekly chart, so some pullback moves in between could be expected, but you should use that pullback moves to take an exit, and it won't be advisable to stay with the stock for a long period of time.
All right, that is a call on Lux Industries. With that, Ruchit, Sharad, I'm going to thank both of you. So thank you very much for joining us and taking out the time to take all of these queries today. We're going to wind down on the show, but remember, you can always email us your queries and we will keep taking them up with our experts. Stay tuned. Closing bell comes up in just a bit for the last 1 hour of trade.